Hey there, Kenneth French of Vast Voice, telling business secrets to entrepreneurs. We're very, very happy you stopped by. Either you're going to watch this or listen to this because you want to take your business to the next level. You're probably an entrepreneur who's either just starting out or you've been around for quite a while and you want to take your business to the next level. You're probably a real estate investor, maybe even a real estate agent, maybe a professional or of some sort, professional advisor of some sort. And well, you are stopping by because you need some valuable advice from one of the top industry leaders there is. Anyway, thank you very much. Once again, Kenneth French, Vast Voice, telling business secrets to entrepreneurs. Really glad you stopped by. What is a qualified plan? Will one make you rich? Will one save you money? What are they? Hey there, my name is Kenneth French from VastSolutionsGroup.com. We're getting more and more calls about qualified plans. What are they? How do they work? Can I, as a solopreneur, as an entrepreneur, get one, even though I don't have any employees, and somehow make money and save money on taxes? Hey there, Kenneth French. Once again, I'm here to help you to lower your taxes, to better your situation, because man, it's more difficult than ever as an entrepreneur. We're going to go over for this next, half an hour, maybe about qualified plans, how to structure them, how you as an entrepreneur can make more money as a result of one of them. Let's get right into it. I'm going to share my screen and we're going to get rocking as we speak. By the way, we've been around at VastSolutionsGroup.com since 1969. We know a thing or two about, qualified plans and ways to help our business owners. Well, here, I'm going to outline some of the specifics of the people who and groups that have mentioned us: USA Today, Entrepreneur, Beverly Hills Courier, Palm Beach Times, Greenwich Post, and a number of others. I've written for the Forbes.com small business contributor, so I know a thing or two about dealing with small business owners. Well, why don't we right now really get into the specifics of the presentation? Qualified plans to the rescue. It's scary. It's really scary out there right now. Can you imagine? Well, having no money in retirement, or really being one of those Walmart greeters, probably something you don't want to do. No offense against any Walmart greeters, but you probably don't want to go back to work after you've worked. Let's say you've worked for 30 years, you've saved up, I don't know what kind of money you've saved up. Most of our entrepreneurial clients all over the country, by the way, have saved, pretty good money for retirement. We have some well-heeled clients here at VastSolutionsGroup.com, but for whatever reason, lawsuit, running out of money, didn't save enough money, you go back to work. It's something you probably don't want to do. You don't want to move in with your kids. Not to say you don't love your kids, but you probably don't want to end up moving back in with your kids here. You don't want to be in this situation. You don't want to be a panhandler. I know most of our clients are worth crazy amounts of money. That's probably not going to happen, but I think you get the point. You don't want to be in the situation where your standard of living changes in retirement. One way of getting around that is qualified plans. We're going to get into the specifics of that any moment. One way of doing it is thinking outside the box. People don't realize in a lot of cases you can invest, not only in stocks and bonds, but also in other assets. We're going to get to that in just a moment. We've been doing it since, a long time. By the way, Jim and I said we were the first to allow DB plans and qualified plans, crypto in our qualified plan. So that shows you we've been doing this for a while and we're pushing the envelope and we know exactly what it is we're doing. Well, we don't do things backwards per se, but in some cases, qualified plans are backwards if you really think about it. We're going to get into the specifics, with the specifics between qualified plans and non-qualified investing. What is the scenario? What can help you as a business owner? Let's say William white collar, he's age 40, earning $100,000, has a marginal tax and rate in state and federal income of, let's say, 30%. He's offered to receive $5,000 annually in either cash contribution or what have you, 401k or what have you. Let's say invests for 25 years, which let's just pretend earns a 5% rate of return. Hopefully it's going to be more than that, but I think you get the picture. We're going to look at both qualified and non-qualified scenarios. What's the answer here? Non-qualified. I'll end up with $166,000 roughly. Pretty good amount, right? $5,000 a year. Well, look at the qualified amount, $207,000. It's a huge difference, 25% difference. What does that indicate to you? It probably makes sense to go the qualified plan route. But, what is a qualified plan? A lot of people are saying, well, I don't understand what a qualified plan is. Think 401k. Really even think IRA as an example. Think profit sharing plan. Think defined benefit plan. Cash balance plan. All of those are qualified plans. Again, I'll go over them. IRAs, you can put in only a little bit. 401k, same. You can defer, especially if you have no employees, only a little bit, but you don't have to give any money to employees, which is cool, right? Same time, profit share plan, the company can put in 25% of salary, generally speaking, but that might not be enough, right? Defined benefit plan, you could put away a lot, sometimes $200,000-$300,000, depending on the circumstances. Especially if you have no employees, that's a huge deal. You don't have to put in any money for the employees. You could, put away a huge amount, $300,000 towards you for retirement. Let's say you're 60 years old and haven't done a catch up. Well, that's a huge amount. You can potentially catch up for retirement if you're putting away $300,000 a year. Let's say you're 60, you want to retire when you're 70. $300,000 a year is a pretty good amount to put away. And it is a possibility. Never know in the circumstances, but obviously talk to your advisor about specifics, but there is that possibility. What I would say for all this presentation is for educational purposes only. But what I would say is go back. You will find some ideas here that are going to add some value. Go back to your advisor, your financial advisor, your tax professional. See what they say about some of these concepts. If they don't know anything, come here. We'll help you out. Go to vastsolutionsgroup.com, check out our website, contact us. You'll hear immediately from us. Now, as I mentioned earlier, real estate and qualified plans in IRAs, in 401ks, in profit sharing plans. Yep, you can do it. You can have real estate in your qualified plans. A lot of people don't realize that. Yeah, you can have stocks, bonds, et cetera, et cetera. But you can also have, alternative assets. You can have tax liens as an example. Sometimes more and more people, it seems like more and more people are talking about tax liens in their qualified plans. By the way, you can even get a rollover. You can roll over from, let's say, a 401k to an IRA. You can roll over, let's just say, from a profit sharing plan to an IRA, profit sharing plan to a 401k, IRA to a 401k. And in the cases, anyway, what I'm getting at is you can have a rollover that would go into a qualified plan. Now, the cool thing is about a qualified plan, specifically as it relates to 401ks, profit sharing plans, defined benefit plans, you can roll money. You can take loans out of them. You can out of 401k. You cannot out of an IRA, but you can out of the ones I mentioned otherwise. 401k, profit sharing plans, defined benefit plans. You can take loans. If you have no employees, noemployees.com. Makes it nice, as I mentioned, because you can put a bunch of money away in your qualified plan. You don't have any testing. Well, you still have some testing, but you don't have as much testing, and you don't have to put away money for the employees. There's no testing as far as you having to put money away for the employees. So it's a big piggy bank in that case. And it's for you. It's for you, the business owner. If you have $300,000 in there with no employees, that whole $300,000 chunk is for you. Now, you can direct the investments, again, into real estate. It makes it nice, right? And by the way, a lot of people say you cannot have insurance in a qualified plan. The answer to that is yes, you can. Again, speak to your specific advisor, but you can have insurance in qualified plans in many cases, by the way. Bitcoin, crypto, the answer to that is yes. You can have crypto in your qualified plans. I know a lot of financial advisors are telling you cannot, but you can. It is the case. And et cetera. You could look for a lot of other things that are, that are potential investments to go up that usually are allowed by the IRS. Check with your advisor to see some specifics about some of the testing as far as, some of the things you cannot do in having a qualified plan. Also, they lower your taxes. It's a big advantage to lowering your taxes, right? What happens when you lower your taxes? You're happy, right? Plus, qualified plans are relatively convenient, generally speaking, especially if you could put away $400,000. It's a convenience factor of, not having all these accounts. What you end up having is, an account. Think of it in these terms. I give this analogy. I've given it to one of my buddies, right? Imagine having an umbrella. And I live in Seattle, so you're going to have rain coming down, right? If you're under the umbrella, you don't have to worry about rain. Let's say you peek outside the umbrella for whatever reason, all of a sudden it's raining on your head. Those are taxes. When you keep your head under the umbrella, you don't have to worry about taxes. Generally speaking, when you pull your head out of the umbrella, hit with rain, that's when you have to pay taxes. Same thing as a qualified plan. 401k, if you have a bunch of money in a 401k, and you roll money, let's say you take a withdrawal of whatever the amount is, $10,000, that's when you pay on taxes. But what I would say is convenient because there's not a bunch of reporting, as an example, because you're not, even if you're doing trading, specifically if you're doing a lot of trading, you don't have to report to the IRS because it's in the qualified plan. Let's say you're doing a bunch of crypto and it's in a Roth 401k. Yep, there are Roth 401ks, by the way. Well, you're doing a bunch of trading. We have guys who trade, girls who trade, hundreds of times a day. Well, they don't have to worry about the short-term capital gains because it's in a qualified plan. It's convenient. There you go for convenient factor. And estate planning. In some cases, depending if it's properly structured, meaning the 401k, you don't, well, I won't say you're going to be 100%, but in some cases, you don't have to worry about a liability because it's hard to get at the assets in a qualified plan. Everyone knows the O.J. Simpson example where his ex-wife's family couldn't get at his assets in the qualified plan. Therefore, he had a pension coming out of the NFL that they couldn't attach or couldn't attack those assets. Believe it or not, that is the case. It's very, very difficult to get at qualified plan assets. Again, I'm going to remind you, 401k, profit sharing plan, defined benefit plan are all qualified plan assets that are really, generally speaking, hard to get at in a lawsuit. Also, control. We allow our trustees, as they're called, let's say company owners in this case, let's say there's no employees, to control the assets, to be able to, invest as they see fit. And what we do is we help them. We act as a consultant. Generally speaking, it works out pretty well. Sometimes they run afoul of the IRS rules if we're not involved, but you, in this case, have control. You have ultimate control. So we call them trustee-centered plans, which is a big deal because we believe, and you know what you're doing as far as investments. You might need some consultation, but at the same time, you're in control. By the way, if you're in control and the assets go down, it's on you as an individual, right? But the nice thing is you can sleep well because you know someone who cares about your asset, that being you, is taking care of the qualified plan assets. So we allow you as the plan sponsor or the trustee to be able to control your assets so you can sleep at night knowing that your assets are in the right hands. But, at the same time, you might need some help. Probably going to need some help. VastSolutionsGroup.com can help you with your qualified plans. We've been doing them for years, and we're here to help. My name is Kenneth French at VastSolutionsGroup.com. Once again, we've been around since 1969. I took over in 2006. We have offices in every state. We're here to help you as an entrepreneur. We've been doing business all over the country. We only really deal with entrepreneurs, specifically with entrepreneurs who are usually real estate investors, hence the reason so many people come to us because they like it that we allow them to invest in pretty much any asset as far as it's legal, et cetera, et cetera. So what I'm going to do is I'm going to close up shop now. Hopefully this has been fun. It's been a time we learned. If you have any questions, once again, Kenneth French. Oh, you stuck here this long. The Entrepreneur's Manifesto, a collection of smart financial advice. It's a bunch of articles that I've written over the years. And really, especially when I was writing for Forbes as a small business contributor, I did a lot of research for business owners, entrepreneurs. And really, this book will add value to you as a small business owner. Email book to info@vastsolutionsgroup.com. Again, info@vastsolutionsgroup.com. Email book. We'll need your address, but go ahead, email us, free copy of that book because you stuck here that long. I really appreciate you taking the time to listen, watch. It's been fun for me.